Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everybody, Ben Rings here today with top stock picks for Zacks. Today I'm looking at Ulta Beauty, which trades in the ticker, which is its name, ULTA. So Ulta began to reshape the beauty retail space back in the early 1990s by bringing tons of various products under one roof. Today, Ulta's larger format stores sell everything from cosmetics and fragrances and skincare to hair care and much more. They also allow you to try on these products in the stores with the help of retail associates. Ulta also sells an array of brands across a variety of areas in different price points, from higher end companies into its own store brands as well. The company currently operates roughly 1,300 retail locations across all 50 states, and it's posted really impressive double-digit revenue growth every year since its public debut in 2007, outside of obviously that pandemic lockdown pullback when people had less reasons to be getting dressed up and putting on makeup and doing their hair. Ulta posted a stretch at one point of 8 straight years of roughly 20% or higher revenue growth. And it's bounced back in a big way following that COVID slip, with 2021's revenue up 40%, plus its adjusted earnings skyrocketed to come in above its 2019, so it's pre-COVID levels as well. And it's also coming off a big second quarter, which it posted at the end of August, so on August 25th. It also raised its guidance as it sees strong trends in beauty despite overall slowing consumer spending and inflation headwinds. So the company's upbeat EPS revisions help it land a Zacks ranked #1 strong buy right now, and it's crushed our EPS estimates by an average of 33% in the trailing 4 quarters. So looking at our current estimates, Ulta's revenue is projected to climb 14% in 2022 and then another 8% higher in 2023. And then its adjusted earnings are projected to jump another 20% on top of last year's massive growth, and then do another 10% bottom line growth in 2023. And then in terms of its price performance, the stock is bucking the market's downturn so far this year, with its shares up around 3% versus industry's 23% decline, and the S&P 500's drop as well. This is part of a 75% run over the past 2 years to also blow away the market and the broader econ sector it's a part of. And the stock's also up about 300% in the past decade. And then despite this climb, Ulta is still trading 15% below its current Zacks consensus price target. And on the valuation front, it's trading at a discount to the wider retail space despite that outperformance. It's trading at 19 times forward earnings, which is also a 50% discount to its own 10-year highs and 30% value compared to its median. So really great value as well. And with this, 17 of the 21 brokerage recommendations that Zacks has are strong buys with nothing below a hold. And then on top of that, Ulta is also set to repurchase roughly $900 million worth of its own shares this year, which it's able to do through a sturdy balance sheet and a really strong management team. Plus, its beauty space remains really strong in the face of slowing consumer spending because its shoppers aren't cutting back. It's also worth remembering that many higher income shoppers are still continuing to spend in the face of inflation on everything from travel to makeup. So that's a big boost for Ulta. And there's also an established phenomenon known as the lipstick effect, which showcases willingness to buy smaller things such as cosmetics, even when people aren't willing to splurge on bigger ticket items, which we could see going forward as broader consumer spending slows. So that's all these reasons are worth taking a look at Ulta Beauty. So that does it for me.
Thanks, Ben. My top pick this week is Mongodb. We're going to learn all about MDB and why it is the new database of choice among developers. All right, so let's take a look at the chart first. Here's a weekly chart of Mongodb, symbol MDB. Big sell-off last week. Just caught the street by surprise. Anything growth and expensive, especially in tech, if there's the slightest hiccup in the outlook, the stock gets trashed. So last week, let's see, what was this down? So down over 30% last week, from 350 basically down to 250, 240. But none of the analysts have taken down estimates. And you had some, like the guy from Credit Suisse, he basically lowered his price target from 500 down to 400. We'll look at some of those analyst calls in a minute. I think it's a buying opportunity here. you can see that, look at all on the weekly chart, look at these long tail wicks back in May when they were buying it, we had the correction, big, 25% wipeout in the S&P and even bigger in the NASDAQ. And, they were buying this. And so I'm looking for this to be support again. Hey, we could go down to 225. But I would be nibbling here now. All right, so let's look at the estimates real quick, and then I'll show you the analyst calls. So MongoDB is still a Zacks #2 rank because estimates, have not gone down. They've stayed up. So let's take a look at the picture here. We're looking at 37% top line growth here to bust 1.2 billion. So, that's why you're paying up for this stock, right? With 37% annual top line growth. And even next year is projected to cross 1.5 billion for 26% growth. To remind you what MongoDB does, they're like a new, data center platform. So basically, you could compare them. They're like the little guy in the space of AWS, Azure, Google, but developers really love the platform. I saw the CEO talk about it on CNBC a couple of months ago, and just how it's almost like the strategy of NVIDIA is get the developers to fall in love with your product and your platform, so they're using it, so they're building on it, and then that will bring corporations to migrate to that platform. And you need alternatives, right? You can't, if your business relies totally on Google Cloud, or Amazon AWS, or Microsoft Azure, you get wiped out if you don't have redundancy. So you want dissimilar redundancy, and MongoDB offers that. So, and look at the EPS growth this year. So this is the EPS down here, 54% EPS growth. Yeah, they're not profitable this year, but they're coming back strong and projected to be profitable next year with going to hit 20 cents, and that would be a big boost. So let's take a look at where the analysts were after the debacle last week. I also wrote about Crowdstrike because they were in the crosshair. So this is what I told my people on September 1st. MongoDB delivers mixed Q2 results that tank the stock. The good news was that total revenue growth of 53% year over year was much better than expectations of only 43%. And Atlas, their primary platform, grew 73% year over year versus expectations of 60%. So the bad news is that management was just a little cloudy on underlying macro conditions. No surprise there. I'm sure Google and Amazon and Microsoft are seeing the same thing, that corporate IT spend is softening a little bit. New investments in database, data center technology. So yeah, it was the Credit Suisse guy lowered his price target to 400. Canaccord lowers to 360. Baird lowers to 330. Stifel lowers to 320. Let me see what some of the good comments were here. So the guy from Canaccord said, shares remain expensive on a relative basis, but this is a unique animal here. He thinks this is one of the more interesting long-duration growth stories in mid-cap software. Continues to underpin his favorable view of the stock, and recommends ownership here on this weakness. Let's see who else I want to highlight here. So, the Stifel guy. So, the commentary from management was about consumption headwinds, and that's why they tanked the stock 30%. But still, the analysts are not lowering estimates. And, so he sees the guy from Stifel sees the consumption trends as temporary and expects usage to rebound as the economy normalizes, leading him to view the commentary as creating a good opportunity for investors. And I think so too. And in fact, we had sold, we had a pretty decent position, and we had taken profits twice above 300. And today I just added a little bit more, not a lot, just added a little bit more here under 240. and we'll see how bad the pullback gets here in September. So that's the outlook for MongoDB. Definitely want to take some nibbles here, I believe. And that's it for this week's top stock picks. For more goodies from Zacks, check out this week's promo. You can see the URL there. Always something good to dive into. I'll be writing Zacks Confidential this week, so you might want to check that out too. All right, talk to you next week.